Hello and welcome to The Dark Roast. I'm Donna Stroll and I'm here with the always lovely and talented Rose Short. And today's topic is something that makes people's eyes glaze over, right? We're talking about LLCs, S Corps, taxes, basically how to stop mixing your rent money with your ad spend. So it's all about treating your business like a business.
Not just treating it like a business, but also having the IRS treat it like a business, right? Because there are so many tax advantages and deductibles available if you run an LLC. We like to complain about the rich staying rich, but this is really how they stay rich, is they understand tax law and they use it to their advantage. And you can start doing that now, even when you're small and still struggling. There's a lot of tax saving and a lot of just money back in your pocket by doing that initial LLC. Now, we are not tax professionals. We want to put that out there right now, but this is an important piece. Maybe not right away, but down the road.
And also, we're not lawyers. We're just a couple of gals who have been in this long enough and whatnot to know that there are some things that are going to be valuable to you. And that's why we thought it's time to bring this up, especially with tax season around this time. So if you're running your affiliate business or your online marketing business through your personal checking account, praying that the Stripe deposits don't get noticed, this really is something, this is the episode for you. Because there are people who hit their 5-figure month and then find out they owe thousands in taxes. And they're like, that they didn't plan for. And that's a big deal. If you don't have any separation between your personal money and the reinvest into your business money, you're going to find that you're going to end up with some serious issues. So today we're going to break down when an LLC makes sense, what an S Corp actually does, and some simple tax moves that you can do to protect your ass and keep more of what you earn, right? Because that's the goal, right?
Yep. So we hear all the time, right? Oh, online income isn't real income. Well, guess what? The IRS sure does think it is. So regardless of if it's side hustle or if it's your main income, or if it's just a couple bucks here and there that you're just throwing, you still need to report it, right? Now, I believe, and double check this because this might have changed, but if you make less than $600 from a single source, I believe you do not have to actually claim that. So if your affiliate income from a product that you barely talk about comes out under 600, I don't think you actually do have to claim that, but that law might have changed. So please double check that. And just, it's best to err on the side of caution, right? So realistically, every commission, sponsorship, payout, etc., that's income. You should treat it as income. So are you treating it like a business or like a pile of cash under your mattress, right? That's the thing you need to think about. So there's two really big reasons to legally structure early, I should say. And this is what I did, honestly. As soon as I got into this, I started an LLC. Because number one is protection, right? We live in a world where everyone jumps to conclusions and it's really easy to slander anybody online, especially with AI. So one bad client or legal issue could potentially destroy everything you have, right? So if you're running this if you're recommending a product and somebody gets sick, or you didn't disclose enough and somebody had issues, they could come after you because you're the one that tell them. Now, if you're running it through an LLC, they go after your LLC. They can't go after you personally, which means all of your personal assets, your house, your car, your personal bank account can't be affected. And then the second reason is taxes. When you are an LLC, a lot of your daily expenses can become deductibles, right? Deductions, like your internet, your car, if you're driving somewhere to do content, if your cameras, your audio gear, your electric bill to some point, your home office to some extent can be
portion of your mortgage or your rent, a portion of your electricity, all of that stuff. And so those things can save you money, let you keep more of the money that you have worked so hard to make. And the mindset is simple. It's to start basically treating your business like a legit business. And then we talk about that with your time. We talk about that with the mental attitude of how you're going to do it and consistency. This is another area where it's really important that you treat your business like a business. So what do you want to do?
As I say, you have a few options here. LLC is probably the most common one, I would say. It's a limited liability company. You don't need another person involved. You file it with whatever state you're in, you pay a fee, Now you have a whole separate legal entity. Now you do have to pay a yearly fee to keep that LLC up. And I believe there's also a fee if you dissolve the LLC. But the LLC now can have its own bank account, its own contracts, and in many situations, again, just to protect you from personal things. Now, some business bank accounts do have, the bank that I use does, they have a separate tax pocket account where if you tell it to put aside tax money, which will help keep you from, again, having to pay a bunch of taxes that you weren't prepared for, that'll just auto save it so you don't necessarily, you can see that it's there, but you don't necessarily see the money and then draw out of the bank. Then C corporation, obviously we all know about corporations. When you go corporation, I believe you do have to have a second person. You have to have a second shareholder, but it's its own tax bracket as well. Still files its own return. It's just a lot more complex than maybe what you need when you first start out.
Especially if you're a solo.
And then S corps, it's not really a type of company. It's just a form of tax election that you can choose for when you file. Oftentimes LLCs will use this because once you hit certain profit levels. So when you're first starting out, you probably don't need to file as S corp. But once you get into those higher months and that higher bracket, which I believe it does list out pretty easily, I don't remember exactly what the bracket is off the top of my head or what that dollar amount is, then you would want to start filing as an S corp.
And all that information is going to be available to you. You can look it up online. The information is readily available to you because, like we said, we're not tax accountants, we're not lawyers, right? We're just here to provide you the basic information so that you can make some good choices and how to move forward next, right? So for LLCs, for affiliate and online marketers, they're usually the first real structure, like you say, most affiliates look at. A lot of actual courses will have a lawyer that does LLC specifically, but you don't have to go through them. You can do it on your own, right? There's tons of even actual little legal companies now. That's all they do. And so you can get it for a little bit less. So when does an LLC start to make sense? There's a few milestones. So you're making a consistent income and not just a random 20 or $200 a year, right? You're signing contracts with brands. This is a big one, clients or sponsors, or you're hiring people. If you're hiring freelancers and VAs to help you with your process, you've definitely reached the point where you should be looking at an LLC, or you start to feel real risk, right? You're giving advice, you're driving traffic, you're collecting data, you're doing all the things that a real honest business is doing. Then anywhere that someone might be able to blame you and take stuff from you, this is when you should definitely be looking at an LLC. It's easier if you do it right from the beginning because then you can start utilizing those tax write-offs. But if you've decided that you want to wait to do that because you're not really sure or you're just dipping your foot in, but once you reach these milestones, this is definitely a point where you want to look at that LLC more seriously, right?
Oh, yeah. Yeah, and again, it helps with your mindset as well, a separate part, right? Because now it's a real thing, right? Oftentimes when people are doing it without an LLC, without a separate bank account, it's like, oh yeah, it's just this thing I do. Once you have that LLC and the separate bank account, it becomes a lot easier to treat it like a business because now it really is a business, right? But keeping your professional or your online income and your personal income separate is big, and it's going to help in the long run. And again, you can open a business bank account, you can accept payments that way, you can link your PayPal to it. There's a lot of different things you can do. And again, a lot of these business banks will help with keeping track of your taxes, and will even create the tax forms you need at the end of the year. Now, it doesn't mean that you're not going to get sued, right? It doesn't protect you from that. But what the LLC does is it does protect you, again, your personal savings, your 401ks, everything you've had from a previous job, all that kind of stuff. It protects them from being able to go after that. It also makes you look more legitimate, right? It's not just, oh, here's my personal bank account information. It's like, let's go into a business, and it gives you a little bit of credibility. And again, you don't need it right away, but fail to plan to fail. So it is better to get it started within the first couple of years, I would say, just so one, you get used to filing it before you're really big, but two, it's just peace of mind.
Yeah. You don't want to wait until you actually hit it and things are rolling and then you decide to get an LLC, because now it just makes things more complicated for you, right? A good sweet spot, if you're not ready to take that jump the second you walk in the door, is once you've proven you can bring in consistent revenue and you're serious about growing, right? And that doesn't mean that your consistent income has to be $1,000 a month. Your consistent income could be much less than that, but it's consistently happening and you're working on growth. These are two good indicators that it is time to start thinking about that legal process. So the next one we want to talk about is the S Corp, paying yourself. So this is, again, we're getting to the boring parts, right? But
well, this one is super important though, because this is the thing that everyone misses, right? It's a spot where everyone wants to get to, but then they all forget about it, right? Because once you're filing as an S Corp, it's like you said, you're paying yourself a salary now. So you are cash positive, right? Your business is no longer losing money, it is making money. And that's where you need to get serious about, now the business is making money. Now I need reimbursed for all the time, energy, and whatnot I put into it. Maybe I put starting capital into it, right? So you need to start paying yourself back, but that doesn't mean you take the whole chunk and you drop it into your account, right? Because that is shady. What it means is when you get to that point, you got to look at giving yourself a salary. Look at what you're bringing in monthly and be like, okay, I can allocate this much to myself. And the other thing that's going to do is, again, it's going to help with your business taxes, because now that's a loss for your business. Yeah. But it's money that's yours that you deserve, right? And that's the point that so many people still just mix their money and they miss this point entirely. And if you file as an S Corp without doing this, I think CPA worth the salt that you talk to is going to be like, what are you doing? And it is kind of at this point that you might want to consider a CPA, because if you're cash positive, your business can afford a CPA. And they really know the law of the taxes better than, like, there's a lot of reasons that like ultra rich have really rich CPAs, and that's because the CPAs charge a ton, because what they do is they know the law inside and out, and they can find all those loopholes, they can find all those ways to save money. And that is something that is very, very important for a lot of these millionaire and billionaire type people. So not saying that you have to, but you might consider it. But again, yeah, if you're using an S Corp for your taxes, give yourself a reasonable salary that will be subject to payroll taxes. Be aware of that, because again, you're going to be personally responsible now for paying the taxes.
You're an employee rolled into one. Yeah.
Yep. So you're going to have to pay taxes on the business end and on the personal end. And then additional profit distributions, right? Which may not be subject to self-employment tax in the same way.
Yeah. The idea is, instead of paying self-employment tax on every single dollar of profit, you pay those payroll taxes only on the salary position. Okay. And if it's done correctly, this can actually save you money in the long run, especially at the end of the year. If your profit is high enough to justify the admin and the payroll costs and everything else, this is where you're actually going to end up saving money, because you have those loopholes, because you got a CPA who's going to help walk you through that process and make sure that you're getting everything that you need. I mean, if you're making the money, this is where you're going to want to spend it, not on a fancy car. You're going to want to spend it to help you build and grow for your future and to stay safe. An S Corp is usually overkill if you're just starting out, right? And your income is inconsistent. That's more where you're doing the LLC, the sole proprietorship kind of thing, because there is extra paperwork and payroll fees and stricter rules that you have to go by. But once you're at, this is a real profitable business that I've got going on here, then it's time to go to your tax professional and see about switching over to that S Corp, because it's all about steps, right? Your first step is you start. Your second step is, I've got some consistent income, or it might not be the consistent amount, but I am consistently making something. So now you do your LLC, make sure that you're safe. And then you move on to the S Corp once you start making the money and it is truly consistent and there is profit going on, to help build your business, give you some tax write-offs, and just make things financially more lucrative and more stable for yourself.
Yeah. Yeah. And then tax optimization basics for affiliates, right? Again, you have to look at what counts as taxable income and err on the side of all of it, right? So obviously your affiliate commissions from either networks or direct programs, those are going to count. Sponsorship and brand deals, those are definitely going to count. Ad revenue from platforms, You see this a lot with content creators who at first are like, oh yeah, I'm getting paid on Facebook, which is, it pays my personal account. And then they realize like, oh no, I need to switch this up, right? So if you're getting paid on any of the platforms, that should be running through an LLC, even if your page isn't necessarily the LLC page. It should still go into the LLC. The payments for consulting, coaching, anything like that is definitely associated. And then free products or perks. Like, we don't think about this a whole lot, but you do technically need to claim those once they hit a certain number as well. I can't remember exactly what it is. I think it's over 1,000. But you do need to claim those as well. And then that all kind of rolls into your income, and then you got to look at your deductions. Now, one thing I will say on the income portion real fast, if you are finding that you are putting personal money into your business account to keep it going, that can be categorized as funding versus income, and you won't get taxed on that. So just throwing that out there.
That's good.
And then deductions, right? Those are the big ones. That is your website hosting, your domains, your funnels, your software, your tools, whether it be design tools, AI tools, so Canva, ChatGPT, Mango AI, any of those. Education, like this is a big one, right? The courses are now deductions. Those memberships, books you buy for this, workshops that are tied to what you're doing, those all now count as business expenses. A reasonable portion of your home office. Now this one gets people all the time.
Yeah, you can't take your whole house or half your house. You literally do have to measure out the space that you are utilizing and then market that as whatever percentage or fraction of your home. And then that's the portion that you can take for your mortgage payments and that kind of thing. Or rent, whatever it is that you're doing, right?
Yeah, exactly. Travel and events, right? If you're traveling somewhere to get content, this is now a business expense if you're a content creator. Contractors and VAs, things like that. So for a lot of that, you don't need a tax professional. I will say err on the side of caution when you are doing your deductibles, though, if you're doing it yourself. Because that is the easiest way that people get into trouble, is they will deduct way too much, which will be a red flag, right? So I'm not saying that you can't deduct every meal if you content created for every meal that you went out for, but you better be prepared to back it up.
Yeah, it's the same with your vehicle, right? If you're going to use your gas receipts in your travel, it needs to be for something. So like a good way to do it is if you're going to a convention, you mark on every receipt that you get on that convention what convention it's for. If you are, say, a product person, you affiliate for products or whatever, you have your own products even, right? When you go to the post office to mail that, every time you do that, that is part of your business because you're mailing something to somebody. So the time you travel to and from the post office, the cost of mailing, those are things that you can actually write off. But again, mark it, write it all down. You want to keep the receipts, digital records, all of that you keep, and you keep it organized. Don't just throw it in a shoebox, right? Because that's a thing that people do like to do. I think we've lost Rose for a moment here, but she'll be back. So if you're keeping track of things and keeping them organized comfortably, then it's going to be a lot easier at the end of the year when you have to do these things, or quarterly, because a lot of times with it, it's actually done quarterly. It's not done annually, especially for taxes and stuff like that. It helps keep you more on track. So you want to make sure that you are keeping it organized, keeping those receipts, making sure that everything is in order so that when it is time to file those deductions, it's easy to review. And also if they come back and question it, you've got it right there. No lies found. So yeah.
Yeah, and you can do estimated quarterly taxes as well too, right? Like if say last year you did really well and you ended up owing, you could pay an estimated quarterly to the IRS ahead of time to try to offset that. And there again are a lot of business bank accounts that have that option. I know the one that I use does as well. So you don't need a tax expert, like saying it helps, but you don't necessarily need one. But you do need a dedicated business card and a dedicated business bank. Basic bookkeeping tools, even just a spreadsheet, if it's Excel or if it's something that your bank has that you update weekly or monthly, is going to be huge. And then that's where at the end of the month, maybe look through your receipts. I know no one wants to keep receipts, The nice thing is we live in a digital age. You can take pictures of receipts and put them in a file on your computer and not have to deal with the big old box of receipts, but you should still have them.
Yep.
And then make it a habit of setting aside a percentage for every payout for taxes, just in case, right? Like I said, my bank does it. I've never had to pull out of it, but it's nice to have in case all of a sudden I skyrocket up to $1 million months.
Could happen.
So, right? The goal isn't perfection, obviously, right? It's just to stop guessing and make sure all your ducks are in a row.
Yeah, absolutely. So stage one, you're doing your testing and your early income, you're staying as a sole proprietor, but you're acting like a business, right? You're tracking every dollar, you're doing all the things, you're separating your accounts, you're making your formal business account, like you said, you're setting aside the money. The next step is your consistent income, especially $1,000 to $3,000 a month, right? You're going to have a serious conversation with yourself about forming an LLC. You're going to look at your state, what the rules are. And yes, you can form LLCs outside of your state. But honestly, if you ever deal with an actual physical product, you need to be within your state. That's just the rule. So you want to open that account, make sure you run all your expenses through it, start using your basic bookkeeping. You can't just go on memory anymore. And you're doing deals or client work, you got to use contracts with simple terms, simple and clear, no crazy verbiage, keep it simple and clear so it's easy to read. Those contracts are going to be important with your LLC. And then stage 3 is when you have your growing business, your $5,000 a month or higher annual profit, right? That's when you want to review the structure of your business with a CPA, maybe even a small business attorney, depending on where you're at. Ask specifically whether an S Corp election would save you money in the long run after the payroll and admin costs, because maybe it won't yet, but if it does, then it's the best time. Tighten up your systems, your bookkeeping, your quarterly tax payments, and documentation. Make sure everything is filed, or make sure that everything is got its place and it's in its place for easy reference, because you're going to need that. And then think about your risk. Are the disclaimers, the terms, insurance, what should you add, all those kinds of things. That's where that small business attorney is going to be coming in handy, or your tax accountant is going to come in handy. The point isn't to go from side hustle to S Corp. That's not you. If you get big right off the bat, you might need to do that, but generally we all go in stages. So you're leveling up with that, the sole proprietorship LLC, and then up onto the S Corp. It's going to level with you, right? And so that's the goal. That's how you want to make it happen for yourself.
Yep. So it's not just about paperwork. It's about protecting yourself. It's about protecting your assets. It's about separating your personal from business, making your significant other feel better about it. Maybe they're not the most supportive, or they're very concerned about what you're doing. It protects those assets that you already had. If you took anything away from this, because I know it was a whole lot of legal mumbo jumbo and a lot of your brains are probably spinning right now, this is, I think, where you and I were very early on, is stop waiting for that magic income to start acting like it's a real business.
Yeah.
And again, that's where the separate bank account, this different structure, treating it like a 9-to-5, simple records, all that kind of stuff is going to put you miles ahead of most people, because most people just want to jump in and start making the money and not think about any of the other things involved. And there's a really good feeling when you get to the point that your website domain is coming off of your company card, or your autoresponder is coming off of your company card. Once you move those expenses from your personal to your business, there's just something like really fantastic about that.
When you're not funding your business that way, it definitely feels awesome. Yes. So there are some action steps. You can re-listen to the stage-based section that we did with a notebook. Circle where you are and then pick your next 2 to 3 steps. Then schedule a call with a CPA or a small business or who understands online creators. That's a big one, right? Yeah. And there are ones out there absolutely who are dedicated specifically to our type of thing, because there's a lot more of us out there now. So they realized that was a niche for them, right? We're their niche. Yeah. And then you can ask them specifically, give me my numbers, what structure makes the most sense for me? If you're not sure, then you can go to somebody and just simply ask what structure looks right for me. That's about it. If this episode helped you, or you share it with a marketer that maybe you think is still mixing their money with their ad spend, and then send us a DM. Where you're at, like, you can say sole prop, LLC baby, S corp life. I want to be in the S corp life. We want to hear where you're at, because we love to see how you're succeeding and growing, because we think that's awesome.
Yeah.
I think that's it, and that's all for us today. If your brain hasn't completely fallen out of your ear by now, I want to say thank you and have a great weekend. That's it from us. If this episode helped you,
or at least entertained you,
go ahead and like, subscribe, and share.
We'll catch you next time.